Hey guys, well, it's been a couple of weeks since I posted a video like this, so I thought it was about time put something together with Christmas only a few weeks away. Which, incidentally, I do genuinely believe the financial markets, particularly the stock market, is going to rally strongly through to the end of the year because what we're going to see is inflation continue to fall. The US Fed minutes just a couple of days ago pointed towards Fed committee members being more dovish in 2023, which basically means they're going to ease up on their aggressive interest rate hikes. I think they will hike rates in December and maybe in January, but after that, likely pause for a while. But really, all of the signs right now are pointing towards enough money sitting on the sidelines to come flooding back into this market before now and the end of the year. There's so much self-interest, so much self-interest. I mean, you do not see the S&P 500 down 15, 16% leading into December very often. And when we have the market conditions the way they are right now, for example, inflation is going to come down, oil prices are falling, rents are falling, shipping costs are falling, everything is pointing towards inflation coming down. The next inflation print is on the 13th of December. The Fed will have their last meeting for this year on the 14th. That gives about another 12 days of trading activity between then and the 1st of January 2023. And I think I would be extremely surprised if inflation doesn't fall meaningfully again. And the Fed actually could be put in a spot the day after to maybe even think about dropping rates back to 0.25% increase rather than 0.5%. So one of the concerns that I have going forward into 2023 is that US consumers, the cash is gone. The cash that they had after the pandemic and all this money that Biden was handing out and the stimulus programs, et cetera, the cash is gone. The credit card spending is going through the roof now. Consumers are still spending money, and that is going to come home to roost in early 2023. It has to end, and it's going to end with lower growth, and it's going to end with lower inflation. But it's also likely going to end with lower company earnings. And that is the big concern that I have in 2023. There's always trouble around the corner as an investor you've got to be looking for. But that's not going to stop us from continuing to invest. But right now, the consumer is on the credit card. The cash is gone. They're on the credit card now, and they won't stop spending until that credit card is maxed out. Christmas time, Black Friday today, big shopping period in the next few weeks. Credit cards are going to be maxed out leading into 2023. We're talking about the biggest consumers in the world, the biggest consumption economy in the world, which incidentally, 1/3 of inflation is rent. And I mentioned rent is coming down very sharply as well. We saw in the US a very, very strong labor shortage, which drove up wages. That is reversing now. So what we're going to see in 2023 is the focus won't be on inflation. Inflation will keep coming down, probably somewhere between 3 and 4% by the middle of next year. The share market in the short term, I think, will rip higher between now and the end of the year. And I think in the first maybe few weeks of 2023, we'll see a meaningful continue in that momentum. But where the financial markets is going to have trouble in 2023 that we need to keep our eye on, need to be focused on, and you need to have the right temperament to be able to sit on your ass and get through these periods, is company earnings. Because if consumers have their credit cards maxed out and that cash is gone, the cash wasn't gone in 2022 until late 2022. Now the cash is gone, the credit cards are out, and the growth is going to slow in 2023, I believe. And that is potentially going to lead to lower company earnings for a lot of businesses. If they've got pricing power, if they're businesses that consumers need rather than the wants being the boats and the cars and the luxury goods, the watches, all that sort of stuff, they're going to struggle. Companies in those industries. Where the businesses will do well in 2023 are the needs-based businesses. I need to put food on the table. I need to make sure that I've got the latest technology. I've got the latest iPhone. People won't compromise on that sort of stuff. They're going to put food on the table. They're going to go to Costco. They're going to go to Walmart. They're not going to buy less Coca-Cola, things like that. But I can tell you that they will buy less boats. They'll buy less cars, those sorts of things. So you've got to make sure your portfolio is positioned correctly. I'm doing a masterclass on Saturday, the 3rd of December for all of our clients. It's called the Get Invested Masterclass for 2023. So all of our clients will get an invitation to that 4 hours. I want to make sure you own the right businesses leading into 2023. You own the right number of businesses and you own the right number of shares for those companies. And also being able to work out what your dividend returns are likely going to be. And also in 5 to 10 years, there's a metric that we can use that will give us a reasonably good, accurate assumption is if the company continues to perform like it is now, what my return on investment is going to be from a share price perspective as well. So that's going to be a really good masterclass. But right now, guys, I would be very, very surprised if markets didn't rip higher between now and the end of the year. Let's wait and see what happens. But we are positioned well for it. We haven't sold a single share in our portfolio for over 18 months now. And we've sat patiently through 2022, continue to invest, continue to buy more shares. And we've done just fine this year and we'll do just fine next year as well. So look out. Only a 3.5-hour trading session today on Friday in the US after the Thanksgiving holiday Thursday. I trust you have a great Friday and a great weekend. See you next week.